one thing that I wanted to point out, so we're currently up here at about 5.33%. Is
I don't know if you can see this, but there's our little tiny herd of horses walking right behind me here.
adorable. I
So,
love
yeah,
it.
yeah.
That's the place to be.
Hello from the ranch. I've got Alan Hibbard with me once again, and we're trying something new. It's a weekly wrap up. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great, great. So, what have you're the one presenting this, and I haven't seen any of it yet. So go ahead and hit me.
Yeah. All right, Mike. Sounds good. You just sit back and relax at the ranch. I'll tell you what happened this week. so
Okay.
so so first of all, I want to start with the number of the week, and that is 2,000. 2,000 because gold hit $2,000 an ounce this week. We're recording this Friday afternoon. Markets still haven't closed, so it remains to be seen whether gold will close higher or lower. But gold did touch $2,000 a couple times this week. Any thoughts on that?
Well, I would imagine that they'll, if it's manipulated, they're going to try and smash it down so it closes below 2,000. They don't want to close higher than that. But the real number to get past is, I believe, 270. Right? Is that to start setting new highs? We got to get up to 280, 2,080, 2,090 to start setting new highs. But we are so close to those highs. If anything goes wrong in the world, and there's a lot going wrong, then we could be seeing some brand new highs. And we're already seeing new highs in almost all currencies except measured in US dollars. And so the US dollar is like the last one we need to join the party here. And I think you're going to see gold giving some spectacular returns. I'm actually hoping it does a further pullback. Everybody hates it when I say that, but I would like some time.
Yeah, exactly. If you're not done buying, you want lower prices so you can finish allocating before a big slingshot move. And that actually is exactly what central banks are benefiting from. And that leads us to the tweet of the day. This comes from David Morgan. He says central banks bought 77 tons of gold in September, 337 tons in Q3. That comes from the World Gold Council. So yeah, central banks are buying. They have not finished allocating their position. And this is a major turnaround from a trend of several decades ago when central banks were unloading gold. Now they're stocking up. So what are your thoughts on that?
Well, this is all this isn't the West doing this. This is usually the East. The West isn't buying. They're not really selling either. They're just sitting tight. But, I think Dave's tweet there says that what else needs to be said? This is it. They're buying. And so, I wish I had more extra cash right now. I don't. But I'm pretty fully invested at this point. So, but yes, it shows that the central banks view gold as now a tier 1 asset for central banks. It's considered as safe as sovereign bonds, but it's even safer. There's no counterparty, so it is the foundation. And there's a lot of central banks that don't have enough gold. So, anyway, any thoughts that you've got on it?
I agree with you. And speaking of extra cash, that actually leads us in. This is really funny because you didn't know any of this ahead of time, but it leads nicely into the news of the week, the headline of the week. Japan approves $110 billion stimulus package to fight inflation, which I just think is just so fantastic. I mean, it's like we're living in a dystopian fiction novel.
This is 1984 and Newspeak, I think they called it. I can't remember, but they're twisting the language to where, how much of the language has been twisted since 2020 began? It's like a totally different world. So yeah, everything is crazy.
It is. Everything is crazy. Okay, next thing I want to show you is the chart of the week. And this is a chart of the Fed funds rate. So we've seen this plenty of times. And the reason I'm bringing it up this week is because the Federal Reserve decided to keep rates where they are. And one thing that I wanted to point out, so we're currently up here at about 5.33%.
I don't know if you can see this, but there's like our little tiny herd of horses walking right behind me here.
Adorable.
So,
I love it. That's the place to be.
Yeah. So.
Okay. So anyways, one thing I wanted to point out with the Fed funds rate is that when they raise rates, they do so slowly and in a controlled fashion. And then, there's sort of a rounded top or a flat top, and then it descends quickly and chaotically in the middle of a recession. And it feels very out of control to me. That's what it feels like to me.
I want to point out something too on that same spot that you're looking at.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer, and now back to the video.
They know that a recession is coming. They started cutting rates long before the gray bar there, the official recession bar. And so they knew that there was something really wrong in the economy, and they started bringing them down in an emergency. Can you go back to the year 2000 also? Take the slider at the bottom, and because
absolutely.
I think it shows the same thing that it didn't update.
Taking a minute to load here.
Yeah, see, it started. They start lowering rates before the recession actually starts. So they know that something is going wrong in the economy. So they pause it, knowing that they've probably gone too far and that they're going to cause a recession. And then when it finally happens, they start slamming rates down ahead of the official announcement of the recession. It's been, look at that. I mean, even the COVID crash, they knew that something was up, and there was something, I can't remember what it was, but something happened in the repo markets, the repurchase agreements that the Fed was intervening in. And they started taking down rates because the Fed caused a big problem there. And so anyway, phenomenal.
So exactly, if that same pattern emerges here and the Fed holds rates constant for maybe the next year or so, and then starts lowering rates, we can anticipate that we're headed for a recession.
Or some sort of giant crisis. Because that's what I think it's going to be. It's not just going to be a regular recession. There's going to be a full-blown, financial crisis, currency crisis, some sort of big crisis. And it could be accompanied by even larger scale wars than what we've got going on right now. I hope not. But anyway.
Yeah. Exactly. Okay. All right. Well, moving right along, I have the website of the week, which of course is goldsilver.com. Everyone can find all the latest news. Cameron spends a lot of time and energy compiling all these for us. There's great things here. China spearheads voracious central bank gold buying to cut dollar dependence. So like you said, Mike, countries in the East are buying gold, just like what we talked about. And here's what might happen next, as $2,000 gold is just the beginning. There's all kinds of great articles here. I encourage everyone to check them out.
Excellent. Okay.
And finally, the last thing is the product of the week. In this case, it is the 1 ounce American Gold Eagle coin. The 1 ounce American Gold Eagle coin. This is the first bit of gold or silver that I ever bought myself. Many years ago, I think it was 2015, and it was only $1,200. Now it's $2,100. This is how I got started with precious metals. It's such a classic way to get started. I just had to choose it as the first product of the week.
I got started with a whole tube of gold. The spot price was $315, and the gold eagles that I bought cost me $325 each. And so that was October of 2002, I believe. And so I've been riding this thing for a long time. There was I think I mentioned it in a previous video, but there's a channel called financialsense.com, and they've got a YouTube channel as well. And Jim Poplava said that the toughest thing is to not let, when you discover a brand new bull market, the toughest thing is to ride that bull and not let it buck you off its back. And I just was determined from the end. So I'm still riding this thing through every pullback. And, so from $325 Eagles to $2,000 Eagles, I've done pretty darn well.
Yeah, that's almost 7x. Yeah.
Right. But like Dave Morgan always said, 80% of the move comes in the last 20% of the time. And I think we're there. This is going to happen in just the next couple of years. The 80%, I really believe that we're going to be seeing gold well north of $5,000 an ounce, probably up 10,000 or even higher. And that will put silver up in the triple digits. So it's going to be a wild and fun ride over the next couple of years.
Yes. And as you say, at that last end of the bull market, gold and silver become unaffordium and unobtainium. So definitely,
Exactly.
I would encourage everyone not to wait until there's crazy upward momentum. Take your position now, because otherwise you're not going to be able to get a hold of these things.
And before investing in any paper gold, futures or options or the ETFs, investigate them fully. And then you're going to buy physical. You want something that you can hold in your hand if you want. I mean, it's fine to have it in an insured storage account, but you don't want something where a whole bunch of different people think they own the same ounce of gold, because when the music stops, there's only a couple of chairs left.
That's right.
Okay.
Well, yeah, that's it, Mike. Don't want to take up any more of your time. I'll let you get back to the ranch.
Well, thanks. I want to tell everybody, like and subscribe, and thank you very much for watching this video. We'll see you next time.
Hi, I just wanted to tell you about Gold Silver's 111-ounce silver giveaway, where you can win 111. One 1-ounce silver bar, one 10-ounce silver bar, and one 100-ounce silver bar. So enter today and win.